Welcome back to the Rebel's Edge. So how do we follow up one of the biggest bounces that we've seen since this big sell-off began? Well, NASDAQ's not bouncing today. Maybe it will, but the Dow and the S&P are both higher, and Pete and I are going to break down the stocks that are moving and why, with a little bit of sports thrown in right at the end. Bang! On the Rebel's Edge.
I'm so lame, John. I'm sitting there looking at that little leprechaun going, what the hell is that? Well, it's St. Patrick's Day. That's what it is.
That's what it is.
Now
Happy
it makes sense.
St. Patrick's Day. By the way, Pete's favorite T-shirt that he pointed out to me, some girl walking down the beach, it said, I put the double D's in Patty's Day.
Well, bum. All right,
Ba-dum.
next. I think we better go to Macro Minute.
All right, Macro Minute. Headline, retail sales rose 0.2% in February, less than the 0.6, but less retail sales isn't necessarily a bad thing, folks. And we've also got some pretty interesting stories within those retail sales numbers, Pete, that kind of give the Fed maybe a little wiggle room, right?
Yeah, absolutely. The interesting thing for me, John, with the Macro Minute today is that I think a lot of it, some of it is today. I think a lot of it is last week and what led into the Friday rally. And consumer sentiment, shockingly, was pretty awful. And the markets were able to look past that because of CPI, because of PPI, and because of the fact that they'd gotten sold so far that maybe, not the bottom, but maybe there's a tradable area down there. And I say not the bottom because none of us really know that. It would be ridiculous for me to even try to estimate that. But I will say this, we were starting to see a lot more call buying in ETFs and in some of the big, individual names that made it pretty interesting for a huge run up on Friday. And then, of course, a bit of a nice one for sure on the Dow side today. NASDAQ's been kind of all over the place, all over the map. So we'll see how that all pans out.
Well, I know you'll like this one, Pete, because Dr. Copper, we call it Dr. Copper because it's a PhD in finance.
He's being funny, guys, because every idiot who goes on television says that, and it's the dumbest thing ever.
Well, you got to wonder what they think, Pete, with copper way over $4, pushing towards $5. And it's up 19% year to date.
Yeah.
Dr. Copper. So if you're somebody who's using that as a sign of strength in global economy and so forth, well, maybe that's one more sign that maybe some of these dips should be bought. What do you think, Pete?
I think a lot of the buyers are dips. But anyway, so John, we've also got, on top of copper, though, all kidding aside now, silver has been on a nice run. I mean, it's the highest level it's been, John, since going back to October of 24. It's up there towards that $34 area or whatever. So that's something that's pretty strong. Gold got over 3,000, didn't close over 3,000, but got up and over 3,000. So that was something. And then I think looking over at that oil volatility index, and you have talked about this one a lot in the past, and I'm jumping on it today. It's amazing, John, but that's another one where you got to go all the way back to August to find an area where we've gotten down to where we are, which is about a 30 on the OVX right now. And that thing has been up above 35. It's been all over the map, but it's now kind of easing back in a pretty interesting way as we're seeing crude prices right around $67.50.
Yeah, well, gasoline prices down 13% year to date, Pete. All right, let's talk about Incyte, INCY. Incyte, they had a skin condition trial, Pete, that was going on. Phase 3, which means, of course, that they passed phase 1 and 2. You don't get to skip any of these, folks. But their oral inhibitor targeting this particular skin condition didn't do as well as people thought. It did okay, but it didn't do spectacular. And when you're trading at a PE in the triple digits, People want to see spectacular. They didn't get it, so the stock's down 10%.
Yeah, stock getting beat up a little bit. As you said, you're in phase three. The positive side is they passed their way through phase three, and it was viable and all the rest of it. But the problem is, as you said, it's not the language that they used is it's not competitive. And that's a problem right out of the gate, right? I mean, so you want to beat somebody, you want to get that next level out there that's better than the previous, right? And that's an area that they weren't able to do. Now these guys have all kinds of partnerships, John. They work in oncology, they work in dermatology, all of the rest of that. They've got folks out there like Lilly and Novartis as partnerships here and there. They've got quite a few actually. Those are some of the big names, but this is an interesting one. I look at Incyte and, it's a biopharma, so it's going to have higher PEs and all the rest of it. But I think that they've got a deep enough grouping of what they've got in phase three, what they've got also in phase two and phase one. This is when you look at the balance sheet, it's freaking phenomenal. I mean, the dollars that are sitting in there, John, I mean, it's a $2 billion in cash. Their free cash flow is $620 million. And then they've got $60 million in debt, which is nothing compared to the $2 billion in cash. So from that standpoint, I'm still excited to at least wait and see if this is something that might be overdone because of the reaction today. And if so, I think this stock has a really good chance to start moving back up to the upside, at least to where it was, and maybe even a little further than that. So I'm watching it very close.
Well, let's talk about GES, Pete. GES. Yeah. It closed under $10 on Friday at $9.70. It opened over 12 today, Pete, and it's holding on to that gain. And why is that? Well, mergers and acquisitions, something Pete and I have said we're going to see a lot more of in 2025. WHP Global, and I must admit I haven't quoted this one a lot, Pete, but they say that they've submitted a non-binding bid at $13 a share, and the stock's up 26% on the day.
Yep. And it is a little short of that 13. It got up to, I think, 12.29 or something like that, John. And it's been kind of holding up somewhere in that sort of a range. I'm not saying that like, hey, the deal's not going to happen. I'm saying it like, well, that's how these deals kind of work. They usually don't go all the way up into that number. So we'll see how that plays out. Huge shorts in here. I don't say that in this particular case that these shorts are going to get mangled up, though, John. I mean, the low is 9, the high is 33.50, and these guys are making this bid at $13 to take them out. So the shorts aren't going to get absolutely walloped by any stretch of the imagination, but they'll get hit a little bit if they are down here still trying to get some shorts on, looking for the stock to actually start to break through and get back into those single digits. So there will be a little pain there, but I find this one pretty interesting. When you got almost 25% short interest and you've got the kind of debt that they've got, that's another factor that's going to have to be resolved by WHP Global as well, John. Interesting to see, though. This is a company that used to be killing it, right? I mean, killing it. It was $33 not all that long ago, and here we are now talking about a takeout at $13. That's amazing.
It is. And, I guess it'll put it at just shy of $1 billion or so, Pete. So kudos to anybody who's a holder. I am not. Nope. All right, let's talk about Affirm. This, of course, Mark the Shark, Pete, loved this stock forever. And it had a heck of a 2024. Yep. And in 2025, it kept going. And middle of February or so, it traded over $80 a share. Well, it's basically half of that now. And why? Well, it's down 10 or 11% because Klarna, which is a European buy now, pay later kind of stock, apparently took over a spot with Walmart, Pete, that Walmart was using with Affirm buy now, pay later stuff. And instead, maybe Klarna has that. And that's why people are saying, okay, now I know why it's been falling. I'm getting out. Yeah.
Well, that certainly seems to be the deal. Affirm is an interesting company. This whole buy now, pay later is pretty daggone interesting. I think you're right with this Klarna group, John, going in there with Walmart. This is huge for them. This isn't actually as impactful as the reaction that we're seeing today in terms of Affirm. So either there's more to it and others maybe that they might lose, or maybe it's an overreaction because the stock getting hit. It was down, I think, 12%, maybe even a little bit more than that, John. Walmart is only 5% of the gross merchandise volume that they've got. So as big as Walmart is, this is not a huge piece for Affirm. But nonetheless, by losing that, that's an issue. So Klarna, great for them. And they're talking about the whole IPO world and all the rest of it. And now you look over at Affirm, maybe there's something there. I think this is one of those where I think, again, you keep your eye on it because, like you said, look where the stock was not all that long ago and where it is right now and getting beat up again today. At some point, John, if there is something to this whole buy now, pay later, I think Affirm is probably positioned pretty well. So again, I just look at it and say, you know what, the Walmart deal, that hurts, but it's not going to kill them because it's not their only piece and it's only a small, like I said, 5% piece as far as the merchandise.
Yeah. Well, these buy now, pay later firms, including Block, they have one too, Pete, the former, the other thing that Jack Dorsey co-founded other than Twitter. Wow. It used to be called Square. Now it's called Block. Well, keep an eye on that one because it competes in this space too now. Yeah. All right. Science applications. This basically was up 11% right out of the gate today, Pete. Information technology company, in other words, IT, they had a revenue beat that was pretty substantial. And for that, growing their business and so forth, they got rewarded with a pretty nice pop. It's held on to most of that. And the stock was a lot closer to the 52-week low than it was to the 52-week high. So this could be one of those, Pete, that people have sold kind of hard, and maybe they're taking a second look at.
Oh, and they should be, John. I mean, when you look at that earnings report, I mean, they crush it. 257, they were looking for 209. Then you look over at the revenue, they didn't absolutely slam it, but 1.83 billion versus 1.81 billion. They beat that side of it as well. The net income was up 150%. That doesn't seem like such a bad number. Revenue's up 6% year over year. I mean, every number that you look at that they were able to put out there for us, and they raised their guidance as well. I think that this is an absolute home run, what they were able to put up there. Their margins are really, really strong as well. So I think there's a lot to this one, John. Weapons systems, IT, and all the rest that goes into this company. I'll tell you, I'm looking at it and thinking it's a long ways from the 52-week highs. So was it inflated? Maybe a little bit too much. Is it an opportunity now? I'm starting to think so. So I really like this name. I would love to see us see some unusual option activity in this one, which is what we're known for at Market Rebellion. I'd love to see the UOA suddenly come in here and start buying, because if they do, John, I think I'm going to have to strap myself on with them.
Yeah, it is a company that does move around a lot. And when it starts moving in one direction, there's usually not too many people there to stop it, whether that's upside or downside. All right, Pete, what do you got for us in the way of sports today?
Here's something, John. I find this really intriguing because it shows you the commitment that they've had from the SEC. So when you and I were younger, and even just in the last 10 years, how often did we even think about an SEC team in any kind of basketball way? We thought about them in football for sure, right? And they've been this big growing. They were absolutely dominant in so many different ways. And a lot of people will say SEC is the best football there is. There's always arguments about Big Ten, all the rest of it. Well, I think that the amazing thing to me, John, is that the SEC got 14 teams are in the NCAA tournament from the SEC. I mean, if you want to show what your commitment is, I think that sort of says it all, right? I mean, and I'm not just talking about some of the schools that they've just brought in there. I'm talking about Alabama and Auburn and Tennessee. And, I mean, the list goes on and on. And I think it's absolutely amazing what they've been able to do on the football side. I wouldn't say they're absolutely dominant because the Big Ten's done a good job against them. But it's the Big Ten and the SEC in football. Right now, it's the SEC in basketball. And it used to be an ACC thing, right? It used to be some of them. Now, here's where I was going to go with this after I'm just blown out by the fact that they've got 14 teams in this thing. It's just amazing. And they probably missed somebody. There's probably somebody else that maybe deserved to be there. But they stopped at 14. So here's what I got. So let's do this. A lock team that you think is going to win it. And I'm going to tell you right out of the gate, even though he's hurt, it's got to be Duke for me. Because A, great coach. B, great group of guys. C, they really do need their best player healthy, though. And that is the one issue I think that stands in the way. But, John, watching them take apart some of the schools the way they did, whether it's a North Carolina, I mean, I'm talking about very competitive teams that they go up against, and they run them off the court. I think that they are the easy one to pick. That's why I wanted to do two. The second one is this. So there's all these brackets out there, right? They got all the teams, all this fun stuff. Who's your dark horse? It doesn't mean that we think they actually will win it all, but I'll give you one. It's a Big Ten team that has 5 Minnesotans playing on it, but it isn't the University of Minnesota because we didn't make it to the NCAA. Matter of fact, we just fired our coach, Ben Johnson. Great guy, great coach. They didn't give him any NIL money, John. So, that kind of tells you a little something about the commitment for them. They had some. They had about $700,000 for the basketball team. Compared to these guys in the SEC and ACC and the Big 12 and all the rest of them who are getting huge cash hoards, right? They didn't give this anything at Minnesota. University of Wisconsin is the team I'm going with. They are loaded. They are really a tough team to beat. They're physical. They're athletic. They shoot really, really well, John. And it's Minnesota East or whatever. So it's University of Wisconsin at Madison. You know what? I don't think they'll actually win it, but they're one of those teams where they've got enough talent. The way they played up against Michigan and some of the other teams in the Big Ten that were, better. I think Wisconsin could be a dark horse that they maybe at least tweak it a little bit and get a couple victories in before they're gone. Maybe they even get a little further than that. What do you think?
Well, like you said, Duke, Florida, Auburn, those are ones from the SEC that everybody's kind of picking. I'm going to say Kentucky, Pete. I know it's not a real dark horse. I get it. It's Kentucky. But that is one that probably people are overlooking at their own peril, if indeed you're overlooking it for your bracket. So Kentucky Wildcats would be mine, Pete.
Yeah. Well, and shout out to Rick Pitino, who's in 2 years done an amazing job at St. John's, John. His son coached here at Minnesota, and he and I and his son kind of enjoyed a cigar one day down there at Castro's here in Minnesota. Let me tell you, Rick Pitino is one of the nicer guys. People can say whatever they want about this. That guy's a basketball coach. Look at what he's done. I mean, because you can point to a lot. And, everywhere he's been, from the highest of the highs down to the lowest of the lowest, the guy is an absolute gamer. And you know what? It's amazing because he's not a young man anymore, but he still looks pretty damn good. And his coaching skills have not slipped at all. He knows how to speak to those guys, and it's really a lot of fun. All right, John, how about we get a little football, but let's do a video first because Austin Genty is unbelievable. I mean, truly is. But let's see what they have to say.
All right,
Ashton Genty. No prospect is a perfect prospect, right?
No prospect is perfect.
Pass protection at 5'8.5".
Is this Baldy? Is that who's doing this narration?
Get overwhelmed. You see here in this clip.
But look at that. If he doesn't pick up 45, Pete, that guy's taking it right in the chops.
Yep.
He's strong enough. It's just a matter of getting in position and being able to protect himself in order to protect the quarterback. Again, as a receiver, I think he's got traits of Saquon Barkley.
Wow.
Alvin Kamara.
Wow.
As a runner, he's flat out phenomenal.
He's
got to improve in pass protection if he's going to be able to hold up
and that's against a really good Oregon team too.
Yeah, it is.
Again, on these counts, pass protection, there's just area of improvement. Watch one more clip here. Just not where he needs to be at this point.
Tell you what, they're loaded with they're loaded with running backs this year, and you even sent other videos with that include a lot of those other great running backs. We are deep. I'd put it in the same category, and it moves me to the next subject for us, John. Cincinnati Bengals. They have gone out and they have signed two of their wide receivers who the world thinks are probably, as a group now, they've been arguably the best team as far as receivers go in football. Here's my issue, though. They just gave both these receivers ungodly amounts of money. One of them is getting money, John, that is now, everybody's getting higher and higher. He is the highest paid non-quarterback player, okay? So that's one of their receivers. Now, Burrow's got his own, contracts as well. Then he's got another receiver. Here's the problem I have with it, though. I think receivers, and I've said this before, if I'm a GM, are a dime a dozen. I'm not saying any of these guys aren't as good as everybody thinks they are, because they are. But the difference between the top 3, 4, 5 receivers and the next go down 20 receivers later, I don't think it's that big. So if I'm sure happy if I'm Joe Burrow right now that I've got my receivers, right? They're back. They're happy. They got all the money in the world. What I'm not happy about, the offensive line. Because isn't that something we all just learned watching the Philadelphia Eagles with the studs up front that they built on that and got themselves a Super Bowl? The Detroit Lions, who were, arguably the best team in the NFC, but they lost, so they were out. What did they build it on? Offensive line. Joe Burrow, John, has had 200 sacks in his career already. Joe Burrow hasn't been playing all that long. So give that a little bit of a thought. And let me ask you this. Am I totally off my rocker on this receiver thing? Because I love these guys. I think, Chase is great. Higgins is great. They got a pretty damn good tight end as well. But you can't pay all that money to those guys and still pay for an offensive line. And how about Hendrickson and some of the defensive players that they've got, right? I mean, I think that they have spent too much money in receivers. It'll look great at times, but I think it's going to be a problem for Burrow when he's got 5 guys in front of him that are not looking anything like Philadelphia, Detroit, the Chargers, or any of these guys.
It will be difficult. I mean, it's one of the things that held the Vikings back, obviously, against Detroit and against the Rams, in their final few games.
100%.
And it's something that you cannot have a second-tier offensive line and expect that you're going to be able to go up against a first-tier defensive front like Philadelphia's and get away with it. It's just not going to work for you. And as good as Burrow is, if he doesn't get at least 2.5 seconds, a lot of those throws are going to be, overthrows just to get rid of the ball.
Mm-hmm.
So I think we'll see. They could still strengthen themselves, whatever, April 24th draft, Pete.
Mm-hmm.
They could still strengthen themselves there, but because they didn't have a great year.
Right.
They're lower middle of the pack, which means they get, better picks in every round than, for instance, the Eagles or the Kansas City Chiefs, because, those are the top guys. And Kansas City needs to rebuild, and the Eagles need to get some more DBs. They need another DB draft like they had. And by the way, Pete, speaking of DBs, what did you think of this? I had to throw an extra one at him today, folks. All-pro cornerback Derek Stingley Jr., and I think that name should be familiar to all of us because of who his father was. But this kid made his own way. This isn't a Nepo baby. This
Right.
kid is one of the best corners maybe ever, including Dion and all that, Pete. He just got a $90 million contract extension. $89 million of it guaranteed.
Why not just do 90? Honestly, what the hell? Just say 90. The whole thing is.
Can you imagine, though, Pete, a
Yeah.
D-back getting that kind of money?
Right.
Amazing.
Yeah.
And the kid is a player. And the other kid that came out with him, Pete, is looking for that same kind of cash.
Oh yeah. Yeah. These guys, and it's amazing how these GMs can move that money in a certain way. And there's all these little tricks of the trade. They've got there's a team of guys who look through these contracts to figure out how they can do this, because all of us sit here going, well, wait a minute. Now we went up $53 million in 2 years, $22 million this year, but there was a lot of teams that were even over the number already, so yeah, they got a little extra room. That's great. But these contracts, John, are unbelievable. But they shift the money around and they turn it into bonuses and they do this and they do that. I mean, it is Wall Street. And it just happens to be playing football on Wall Street.
Yeah. And on Wall Street, there's no limit to how much you could pay somebody. I mean,
That's great.
just look at Musk. Part of that contract that keeps getting disputed is 56 billion. 56 billion. It wasn't that way when they set it up, Pete. It was
Right.
just a percentage of ownership of the stock if they hit certain levels. Well, they exceeded those levels and the stock exploded. So how much was his stock worth when all of a sudden it went from lower left to upper right? 56 billion.
Not bad.
All right, folks, thanks for joining us. Don't forget, if you need to learn more about options, It's Not an Option is our book. You can get it by going to itsnotanoption.com. That's itsnotanoption.com. Two handsome faces there, so you know how to. But you get it for $9 mailed out to you. So it's no longer free, but 400,000 copies later, I think there's enough good information in here, folks, for you guys to become better investors and or traders.
Yeah.
So check it out. Itsnotanoption.com. Pete and I will be back tomorrow at what time, Pete?
1 p.m. Eastern.
See you then.